Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage and real estate. Weekly videos out on an update on interest rates and mortgage financing. So let's see where we're at in the market today. It's mid-May 2021. CDC just came out and said, hey, we don't have to wear a mask if we're fully vaccinated. I need like a little a noisemaker or something. So since I'm fully vaccinated, I'm like ready to get out and go out to dinner again. But what's the market done? So we've seen interest rates just go down just slightly. We are fourth straight week with a decline in interest rates after 7 weeks of rates going up. So 2.94 on the average 30-year fix, according to Freddie Mac. Check out that link below. While you're down there, hit that like, hit that subscribe. I would be forever grateful, specifically that subscribe and little bell icon to be notified of when there's new videos. So what we want to talk about today is if you're in the unique position of being able to leverage cash, being able to have a nice nest egg, retirement, 401k, whatever that is. So what I'm going to do is I'm going to talk about the 3 different options as you go and make an offer. So you have 1, hey, I'm going to get a mortgage. 2, I've got cash, but I'm going to probably try to get a mortgage. And then number 3, I'm going to pay all cash. Number 1 and 3, very obvious. So number 2 is really what I want to talk about, is what I call cash with option mortgage. Every contract in every municipality or area is going to have some sort of either checkbox or paragraph that's going to basically say, hey, I'm going to pay cash, but seller, I want the option to go get a mortgage. That is probably going to put you at the top of the list when you go to make that offer, because essentially what that means is you are waiving your financing contingency. So if you lose your job and we're using that income, or some sort of misrepresentation on information or whatever it may be, if the mortgage lender says, hey, we're not able to give you this loan, you still have to close. That is your consequence. That is your kind of worst case scenario. You still have to use money. You can borrow from retirement and then pay yourself back. You can, use some cash on the sideline or cash in your current home and then pull some out. Lots of different options to be able to go down that path if you are in that unique scenario. I know that's not everyone, but I've been getting so many questions recently about that cash with option mortgage, or people not understanding that, hey, I'm going to pay cash for this and I want to get a mortgage after. I said, well, why don't you do it as part of the transaction? And said, oh, well, I'm making a cash offer. Well, every contract has that option as well. So it also means that you are basically releasing the appraisal contingency. If you're going to buy a $500,000 home and it only appraises for $475,000, that is not a reason that you get to back away from the transaction, right? Just because it appraised for slightly lower than what you paid for it, that does not give you as the buyer the opportunity to back away without some serious consequence. So you always want to consult a real estate attorney. I know not all states use them, but that's really the best way in terms of like legal ramifications. But cash with option mortgage, super strong. Give yourself, say, a 45-day time frame. Let the lender put it together in 30 days, and then you close with a mortgage at super low rates without having to use the cash, without having to cash out of any investments or anything else. Really great way. The other, which is option 3, is to actually pay cash and then do what we called delayed financing. Makes perfect sense. You delay the financing, right? So the option is once you purchase the property, you close on a Monday. On Tuesday, you start the application for delayed financing. And what it allows you to is go all the way up to, say, 20% down payment. So again, if you're buying a $500,000 home and you pay cash for it, day 1 that you own it, you can start the refinance transaction of getting the cash back out. A lot of times cash out refinances are capped at a lot of different places and only let you get out, say, a couple $100,000 or something like that. But the delayed financing within 6 months give you better terms and allows you to go all the way up to maybe say that 80% loan to value. Now, every loan program is different. Those guidelines change, but just something to consider. So this is the Mortgage Minute. This is how to leverage cash and get your offer accepted. So thanks so much for tuning in. I'm forever grateful. We'll see each other again very, very soon. Get down there, hit that like, hit that subscribe, and we'll see each other again soon. Have a great day.